Despite underperforming the world indices so far this calendar year, the benchmark S&P BSE Sensex claimed a fresh all-time high of 63,588 level on Wednesday, June 21st. Thus far in CY23, Indian headline indices have advanced around 4% each. By comparison, major indices in the US have surged up to 30.5% this year, while those in Europe and Asia have surged up to 29%. Analysts believe this turnaround from last year's correction reflects receding concerns around sticky inflation and tighter monetary policies. Deepak Jasani of HDFC Securities, for instance, observes that global markets have recovered as the recession worries are now partly discounted in the prices. The US Federal Reserve kept interest rates unchanged on June 14, pausing for the first time since May 2022. The Reserve Bank of India too has kept rates steady for 2 straight policies. Thus, if we are at the end of rate hike cycle, should investors start diversifying to global markets?
Though India is a focus market for a lot of global investors, Indian investors can definitely explore the option of putting a small portion of their assets into global stocks or funds. Smart micro-investing in select stocks or funds abroad have the possibility of matching or beating the returns earned on Indian indices.
In terms of economies, Rahul Arora of Nirmal Bang suggests this allocation strategy.
If you take a look at the US, for example, the recession should have actually already set in, but it hasn't quite. The jobs data is still extremely strong over there. China is opening up, so that's seeming like a very interesting trade as well. And the FI flows have just about returned to India over the last couple of months in a very material way after the Fed and the Reserve Bank of India have paused. So I would actually look at having a reasonably diversified portfolio. I think some amount of the allocation should certainly be made to the United States, some definitely to China. And I think if you're looking at the emerging market basket as a whole, I think India is probably your best bet. So I think maybe as an allocation, maybe about 50% still India. And I think of the balance 50%, I'd probably say 25% split even between China and the US.
Analysts suggest risk-tolerant investors allocate up to 20% of their assets across global economies, while the percentage could be 5% for risk-averse investors. Today, on June 22nd, markets will react to US Fed Chair Jerome Powell's testimony to the Congress.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.